What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is April 12th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and I probably don't have to hope too hard that you're having a fantastic day, because if you're just about any cryptocurrencies outside of stablecoins, you're probably having a fantastic day with the recent price action we've seen in cryptocurrency markets. In fact, over the last 48 hours, we have seen $1,000 plus worth of price action to the upside for Bitcoin, even after a great rally back in April and continuously setting higher lows after that rally and smashing through the key resistance that was supposedly going to hold down markets at 6,000. Now, we've got lots of things we want to discuss today, guys. I'm not only going to be talking about a variety of different factors that may be playing a role that in leading markets to the upside. Again, there's not always usually a single catalyst. It's usually a lot of different macro factors. But we're also going to be talking about trying to guesstimate where we could see Bitcoin going over the next few days and weeks. Now, before we dive into those things, guys, as always, as you probably saw in the tribute at the beginning of the video, I want to emphasize something. As I like to talk about when I get something right, I also like to mention when I get something wrong. And I will be honest, guys, like many people in this space, I was wildly wrong on this call of resistance at 6,000. I think it's very clear at this point that we have breached through there. I don't care if it's market manipulation. I don't care if there's actual fundamental factors in this case. Nonetheless, we have clearly broken past 6,000, and I'll be fair in saying that I was wrong on that call. I think no kind of TA could have interpreted for this, and at the end of the day, again, it does lead to some question as to the relevancy of TA at this point in crypto and these kind of markets right now where there's not as much liquidity as what we saw back during the bull run of 2017. Again, very interesting questions. So we're going to be diving into a lot of the different things that we want to talk about today. Let's first go ahead, take a look at the market, and let's start diving into some of the things that we can use to kind of interpret why this might be happening. So over the last few days, again, guys, cryptocurrency markets for the most part are wildly in the green. Outside of a few altcoins and stable coins in the last 24 hours, though, Bitcoin is still outweighing the vast majority of the market, and some cryptos are actually in the red as Bitcoin has started to drop a little bit off of its highs around 7,400. Market dominance is back to levels that have not only surpassed the September highs in 2018, but are back to a range we haven't seen since back during the bull run in 2017. So it's very exciting to see that we're at this range again. Definitely I can understand why Bitcoin is starting to gain market dominance. I think we're flushing out a lot of the speculative altcoins. We recently did an interview with Tone on the podcast. Again, I think we had some good reactions and some bad ones on that. But the major thing that Tone really emphasized is that, there's a lot of speculative altcoins that are going to start to lose valuation. And I don't doubt that. Right now, especially when you've got two major pressures, you've got, as we'll talk about, again, consideration for institutional exposure to Bitcoin, and Bitcoin pretty much specifically, not to mention a decay in the trust of a lot of the altcoins and ICOs that were generated over the last 2 years. You've got a double whammy in that case. You've pretty much got a double weighing effect to increase Bitcoin dominance. We'll see how long this can continue. I don't see it sustaining this rally for much longer and at least pushing sideways for a little while. But again, that's one thing that I'm just watching. Now, taking a look here at the quarterly performance of total market capitalization, we have blasted through upwards towards $215 billion at the peak, and we're testing around that range at the moment. Now, with a doubling of market capitalization, this is where I'm starting to get a little bit wary of Bitcoin, and we'll talk about Bitcoin's price as we go throughout the video. But again, as we've pretty much rebounded, I'll actually expand it out a little bit here just so you all can see it. We'll go ahead and bring it down here to the bottom we saw here. So again, more than a doubling off the bottom of market capitalization since back here in December when the market had set its low around 3,100 for Bitcoin. So very important things to take into account. Now, I'm just going to go ahead and speak my mind on this, guys. It looks like the rally's finally getting a little bit exhausted. I know that probably seems counterproductive with how well Bitcoin's been performing. But again, we have more than doubled off of the lows here at 3,100, and we've gotten to a point where we're really just pretty much going parabolic on Bitcoin's price. Again, with a good amount of volume, I'll give it that, but it's not something substantial enough to where this is a new catalyst, this is a new bull run. And there's really three different price ranges that I'm watching at for a correction here at the moment. So the most kind of momentum traders hope in this case would be that Bitcoin comes down to 6,000, makes key resistance, new support in this case, and continues to rally. And it might even be on a shorter time frame as well. I've got this extending to the end of the month towards June, but again, these are just guesstimates in this case, any time within this price range. There's really three different levels. 6,000, I would say, I apologize, my line's a little off there, back to the $5,000 range. This would be a very neutral view in this case. But as I still hold, guys, I think that there's a very good chance that over a longer term decline, we could still come back down to this line of support. Again, not something that would happen overnight, so I wouldn't be too eager to go short Bitcoin or be bearish on it. But there is a very good chance as well that we could possibly hold here at 6,000. I'm not really going to do too much guesstimating on these different three levels. I'm keeping an eye on them. I'm not going to call for any one of these right now because we just have no way to tell at this point. The price has gone way beyond any expectations. If we would have held resistance at 6,000, this would be pretty predictable that it would probably go down to 4,200, down to this level that was serving as resistance for Bitcoin. But at the moment, guys, I'm not going to try to make any TA predictions. The only thing I can say is that this looks overextended and that we're at least pretty much set to go down to 6,000 in the short term. We're at least expected to see a few red days after this kind of parabolic price action. The reason I can say that with decent confidence is if you not only take a look at the hourly, each hour here has been red over the last, obviously the last 5 hours. But if you take a look here at the 5-minute, the major thing that I want to emphasize, guys, even though there is a matching buyer and seller on each side of the trade, we can see that the massive amount of volume here is when there's downward price action. And that means that the larger traders are causing slippage on the order book. They're selling. So there's more sell side pressure into probably a lot of limit orders on the order book. In this case, this means that people are selling in the market. Same as it is when it's on the buy side, when the green candles are outweighing the red candles on the volume chart. Price is moving up. This means that the more institutional or larger scale traders are buying. Now, let's go ahead, now that we've kind of talked at least about the fact that I expect that we're going to get a little bit of a correction after this. It looks quite overextended. Doesn't matter what indicator you're looking at. The major point I want to talk about here is what are some of the things that could be weighing this up? Is there one single reason or is there a variety of reasons? Well, I think there's a mixture. So let's talk about the first one, speculation. The first thing you've got obviously is Fidelity coming around. Again, this is $7 trillion worth of investment portfolio wealth that could be it's supposedly exposed. Now, I want to be very clear, that's actually not the case. That's what a lot of people have been selling in the headlines. $7 trillion of wealth in this platform is not going to be available directly to invest in Bitcoin and Ethereum. The reason why is because A, not everyone's going to be able to invest in Bitcoin on Fidelity right away. It's open up to a select few institutional clients and will be brought out to other users over time. So eventually it will be true. But the other thing as well is that I don't want to sell it as if $7 trillion of wealth is going to go into Bitcoin, guys. Again, the major thing to take away is that, let's say, for example, a few weeks down the line, maybe a month or two, now it's open up to everyone. Let's say, a quarter of a percentage, that's even more optimistic than I think we can really expect, but a quarter of a percentage of this wealth goes into Bitcoin. There'd be still some substantial volume there. There'd be a lot of buy-side pressure on Fidelity to have ownership of Bitcoin. And depending on how Fidelity does Bitcoin trading, if there is actual custody of it, if there actually is the need to purchase and back those Bitcoin, and this isn't just simply some form of paper trading, that's going to be really exciting for cryptocurrency markets. It will bring some liquidity and some demand, and actually off-shelf already the limited supply that is available on the market to really satisfy institutional exposure. So that will be something good to look forward to, but not right away. The other thing as well that I want to talk about, and this is more again on the speculation side, guys, there's not too much fundamental developments. There's been a new SEC proposal for Bitcoin ETF that's been submitted to the SEC, and this is something that would basically be almost like seen as a commodity ETF that tracks Bitcoin and Ethereum. Again, causing rampant speculation. This was filed, I think, on the 9th of May. You guys can look through the filing yourself to look at it. Looks like most of the filings we've seen before, but again, increased speculation that now we might be seeing an ETF now that there's liquidity in the market. I don't see an ETF coming soon, guys. It's going to be later down the road. Next thing I want to talk about as well, and this is probably actually the strongest factor, and that is, as goofy as this looks, I love this Twitter profile's cover photo. The major thing that I want to emphasize is that speculation and FOMO are probably the biggest driving factors here, guys. And you can see here as well, if we take a look at the analytics here for daily tweets in this case. This is the BitMEX Rect account that basically posts liquidations. You can see here that liquidations have been on the rise here as Bitcoin has been breaking out after the continued breakout past 6,000, and we're almost towards levels what we saw back in April. Again, this was the huge kahuna of a rally that we got back in April. This is where there was massive liquidations. No one expected this kind of rally coming through as we started to test towards the 4,200 resistance and as we went towards 5,000 to 5,400. So again, liquidations coming through here, guys, and what you get short squeezes. It's common in pretty much any market. So again, a few different factors here playing in. Now I want to talk about one conspiracy as well. Actually, one thing as well, just to toss in here about the FOMO point. When you didn't buy Bitcoin at 3,000, nor 4,000, nor 5,000, maybe not 6,000. How about 7,000? Again, you can have people who passed up and thought Bitcoin was going to 2,000 or 1,000, missing out and possibly FOMOing. And trust me, guys, I've met a lot of institutional traders as well. It's very common to see them have FOMO as well. A lot of great people I've met who actually trade on actual exchange, like real institutional management of funds for institutional clients, retail clients. Again, I've seen this kind of stuff before. It can happen to some of the best of us. Now, I want to talk about one conspiracy that's been going around, and that is that Tether has been moving. In fact, Tether that's owned by Binance has been on the move. In fact, over the last few days, we've actually seen what can be seen as about $120 million, if I got my math correct on that. It might be off. About $120 million of Tether being owned by Binance, being moved into a variety of wallets and actually other exchanges where they've been guesstimated to be liquidated in this case, basically pushed in to Bitcoin at this point. Now, again, this is just simply a conspiracy at this point, guys. We can see the transactions are happening. We don't know directly if they're being sold or not. That all happens on the order book of the exchange, but it's something to take into account that Binance has been moving a lot of this ever since we've been seeing the worries of Tether and Bitfinex as well. So could it be just sheer coincidence? I don't know. Either way, if that $120 million is going into buying Bitcoin, that $120 million of Tether liquidity is going to cause a serious move in price. It's a pretty substantial amount of liquidity to be putting into just simply buying up Bitcoin if it's all coming in at once, and that can lead towards pretty dramatic moves in Bitcoin's price. But again, this is conspiracy stuff, guys. As much as I love good conspiracy, I don't want to dive into this being the full reason just yet. Not to mention, it can't simply be the only reason, guys. There's a lot of things that play into it, as I mentioned. As you can see, there's been ascending volume here. And the biggest explanation I can give for it, to be fair, guys, is that this is a common short squeeze, right? The parabolic rise in price action, the lack of any correction in between, and the increasing volume as well that we've seen here over the last few days as prices continue to rise, right? This is what it looks like to me, personally speaking. But I'd like to know what you all think about it down below in the comments. What do you guys make of this? What do you think is the biggest factor that could play into this? Do you think it's just simply buyers and sellers? Could it still be what we talked about back here in April? Could it be that there's too much pressure on the buy side to really, you know, well, there's not enough sell side basically or supply on the market to meet the demand for buyers, and because of that, people are just buying up on the order book? I'd love to know what you guys think about this. It's a very interesting question, and I don't have all the answers to it, but we can look at what we have, you know, look at the data that we have at our hands, at our disposal, and try to make the best analysis as possible. So again, in summary, guys, we talked about some of the different reasons. It could be speculation about new financial exposure to cryptocurrency, specifically Bitcoin, would explain a lot of the dominance rising. We could talk about short squeezing, people FOMOing in, and also conspiracies. But I think more than anything, it's much more towards one of the practical options in there. The FOMO and the sheer fact that short squeezes can have on markets, breaking any kind of expectations for technical analysis. So, very interesting stuff, guys. Above all, everyone, I hope you are having a fantastic day wherever you are. But until the next video, I hope to see you all in the next one. Stay tuned.